So let's change and move with André from ING, and we'll talk about sustainable finance. We talk about ESG, but you will focus more on sustainable finance and the E, I guess. Integration in treasury management. And André Saade, so you are head of transaction service at ING, but could you maybe describe briefly your job? And you're also a newcomer in Luxembourg, or you are recently joining Luxembourg, so welcome. Tell us about your role at ING Luxembourg.
Thank you, Francois. Good evening, everyone. Indeed, new in Luxembourg since June, and also new at ING since June this year. I joined as head of transaction services, which is part of the wholesale bank of ING, which includes payments and cash management, working capital solutions and trade finance, and specifically to Luxembourg, the depository bank and custody services.
Okay, well, let's start with the first question. So about strategy integration. So how can corporate treasurers embed the ESG principle into core treasury activities? For example, funding or investment, because it could be also on the other side if you are cash rich, or even FX, I've heard. So without compromising liquidity, security, and return objective, because it's always a challenge. Okay, can I reduce the cost? But what about the cost in terms of administration burden and additional reporting? And or is it the strategy of the company? Because it depends also on the culture of the company. So.
Yeah, and I think this is the golden question here, with the golden answer that everyone is struggling and being challenged to answer. So your question started with the how, but also if we start with the why are we reporting on ESG? Why sustainability, is an important topic for treasurers and companies? And maybe a little walk down memory lane. The whole conversation started in the 60s on the back of investors and activism around social and environmental justice, specifically around pension funds, wanting to ensure they are investing in companies that think beyond business. And that was a niche subject which carried on for a few decades until the 90s, where we saw, if I'm not mistaken, 1996 or 1997, the GRI report, which 1996, right? Yeah. So, and that was like the first maybe official or main framework that came out, and then it really kicked in the 2000s, on the back of the UN Compact. And we ended up with having a very sophisticated reporting requirement, a lot of asks from the companies. At the same time, treasuries were evolving in parallel. So this is how we arrived where we are now. The question is how we do it. The ideal scenario is very similar in a way to what Paul was talking about, this list of KPIs that a treasurer has and mapping it to your ESG KPIs and policy. And then, when you map the risk, the ESG policy to the Treasury KPI, you're able to come up with how you will implement this into your policy and put that, into your Treasury strategy. So this is the ideal scenario. How do we get there? Two things. And my predecessors spoke about this. Data. We need good data. And to achieve this, maybe we can talk a little bit more about it later. Once you have this as the key ingredient, and then you need to set up a governance framework that embeds all your ESG policy, your sustainability policy, so that it's part of one governance. Because if I ask a question in the room now, how many companies have an ESG policy which is very different from the actual day-to-day governance that they run with? How many committees you have, that are different? So once you embed that into your actual governance and you translate that into your policies, your processes, etc., with a very good quality data, then you are able to do this mapping exercise and tackling all the points that you mentioned.
Okay. No, it's interesting you mentioned the one report, because we can still expect to have one report one day. And IFRS will also help, because I think that we could imagine that we have more and more non-financial information in IFRS reporting, so that we help. But again, question of let's say being at the same speed, because if we in Europe are, let's say, more stringent in terms of ESG reporting, so it's great, it's orthodox, but at the end of the day, we have a competitive disadvantage vis-à-vis the US, and so it's quite interesting. So, but to talk about products now, what are the sort of ESG products you do propose at ING and ING Luxembourg?
So, obviously, we have a list and a number of products that we are very committed to, and it's in the heart, you know, of the strategy of ING and the wholesale bank. I'll keep the transaction services to the end and maybe mention first our financial markets related sustainability and ESG products, such as green bond, help on green bonds, ESG related MTNs, CPs, and the short-term and medium-term securities. Then you have the different lending facilities that ING offers. And specifically here at ING Luxembourg, we noticed, you know, how much, you know, the market also needs support on a product that is, you know, falls under this umbrella. So specifically to transaction services, we are working and will be available very soon on something we call a green reference account, which is a bank account. Very simple, but the balance is linked to green assets. The balance stays, you know, in your bank account while there's a link between this balance and a portfolio of green assets that ING finances and supports. With that, you will get, you know, the report and all the information and the data, and I underline here under data, that will help on your reporting and all the audits and the tracking that you need to do as a treasurer to meet your ESG KPIs.
What is difficult to assess for us as corporate treasurer or association? Is it picking up? Do you see a growth in the use of this kind of ESG type products?
So this is very new. It's early days to judge. But what I can share with you is this came on the back of feedback from the relationships and clients that we have, and the market. While, you know, my predecessors, you know, spoke about how, you know, certain markets are changing and the whole conversation around sustainability and green financing have changed. But also because this is, you know, in our core strategy and focuses, we are sticking to it. And yes, we still see a lot of treasurers, whether in the corporate space or in the FI space, asking about it, and hopefully next year when you ask me this question, I'll be able to give you more details on how that went.
And how is transaction banking evolving to meet this need of treasurers in a digital first world?
Well, circling back, you know, to products and digitalization. So anything we think about here needs to be scalable and efficient and could be optimized very well in order to be able to land, you know, with data that is reliant. So think about it this way. Anything we need to propose here which will make life easier for everyone is something that could be tracked, something that could be audited, something that you can report on, and something you can verify. If you are able to tackle these 4 points, and now after seeing Paul's presentation on verify, it's something to really think about for the future. What you will need to provide, in the transaction services world is the platforms, the dashboards, and the systems to treasurers that allow to do all of this. So, as a treasurer, when you are, let's say, opening a green reference account, you need to be able to trace it. You need to be able to see that if that balance stayed, for a number of days, how much of that, went, into green assets. Also, have the report whenever you need it. Be able to retrieve all of that. So digitalization, dashboards, and systems will be, at the front.
But so, just to summarize, you mean that you need to have a system in place, reporting data, just to make sure that you can benefit from green products. If not, you will chase and dig for getting data, and maybe with uncertainty about the quality of data.
Exactly, and your system need to be able, ideally, again, in an ideal world, you want to have that single view where you are able to manage your liquidity, look at your balances, and have the full view. At the same time, you need to be able to know, for example, when you talk about third-party suppliers, how much of my cash flow and cost that's allocated to this supplier is linked, to my ESG ambitions. So, and if you have that in one place, this will make reporting and tracing much easier.
Yeah, because again, the conclusion we have so far among, let's say, the peers in Europe, if the delta between the cost reduction and the admin burden created for being compliant could be a challenge, and some let's say corporates prefer to go for a basic non-ESG or non-green funding just because of the cost of the admin burden and the reporting behind. So we need to first be prepared to simplify this reporting, and then maybe it will be...
Yeah, and just to stress here, one of the main reasons for that difference in the cost is because, as you said, on the admin burden and the reporting. So when you have, more efficient platforms and tracking dashboards, you are able to eliminate this cost significantly.
Yeah. But this platform, and we know some of them are also quite expensive, so we need to be implemented. Yeah. And it's not only a question of treasury; it's more, let's say, a global, let's say, project for the company. So it's not only us to decide. But how do you see the bank-corporate relationship changing over the next 5 years? Because we will be in a different time, and so how do you see 2030?
So maybe I'll narrow this question specifically to this topic. I remember when you used to have in a full bank 1 or 2 people just focusing on sustainability and ESG, and then we went through Esprit, and the topic just evolved, and the banks were playing more of an advisory role to to the corporates and treasurers on this topic. I think in the next 5 years and medium term, this relationship will change from not only the advisory role, but also the treasurer and the bank will really need to sit together and work together as partners on more also bespoke solutions to meet the specific treasury needs. So this is very key, and we already see that. The second thing that we will see is the ask and demand more for products that are already labeled, that are already verified, because then you're also cutting, the burden of reporting and the management challenges. So we will see, banks getting closer to the relationship in order, to deliver on this as well.
More advisory and closer relationship, because you're right. So if you invest in a green money market funds, you don't want to be in a situation where you need to explain to your auditors or to a stakeholder that it's a green investment. It should be, as you say, stamped and labeled. So interesting. And so how can Treasury incorporate ESG, just to be more practical, ESG and sustainable finance objective without compromising liquidity and risk profiles?
So there's few ways to do this, and maybe I'll share with you what I saw really worked. Back to the mapping exercise that we talked about. What I saw really works is when you are able to start with the phasing exercise, looking at what are your top challenges or main KPIs that might be affected by implementing a certain ESG policy and compromise on liquidity and cost. Identify what are the triggers and who are, let's take third-party suppliers as an example. Who are those third-party suppliers that will help you not compromise on that? At the same time, you need to have what you call like a fallback strategy. So in case the first one, the second one, for some reason cannot meet, those requirements, you are able, to tap back, into the third or fourth choice. And by doing this exercise, you are able to, tackle the cost part without, compromising any of your KPIs. But also the other thing that really work well is when you have a governance that is very robust, a governance where instead of, a blanket no on a lot of things, having a governance that actually take into consideration situations like this. So this is, at the moment, what I see works really well. What I hope in the future we will see more of, the more we have products that are verified, traceable, and all of that, the cost is already lower, then this will be less and less of a challenge in the future.
Yeah, for the corporate. And what are the main blind spots when it comes to integrating ESG criteria into the Treasury decision making?
I go back to the four-letter word, data. Data is still one of the major blind spots. Not because treasuries or treasurers don't know how to interpret that data. It's just because of the quality of data. There's so much to be done there. Obviously, there's no doubt. This is something that's been spoken about today as well. Greenwashing remains a major blind spot. Also, the core understanding of the ESG KPIs or the sustainability strategy that the Treasury or the company wants to deliver on, because a lot of times what you see is you don't have the full buy-in internally. So we are talking a lot about reporting, about the external stakeholders, but also the internal stakeholders need to buy in, and sometimes you can fall into a blind spot because of that.
It helps if the culture of the company is also to be more ESG. Sometimes it's just for the external world and less internally. And maybe a final question. So what will be a sustainable treasury look like in 2013, 5-year time? How could we imagine? Because we are talking about simplification of reporting, and of course ESG in the omnibuses, it's quite important. But how do you see the future? Will it be more, let's say, common or maybe generalized everywhere?
So when we talk about sustainability and ESG, we focus so much about green, but we also need to remember, the social and governance part as well. So where I see and the expectation is in the medium and long term are treasuries where the ESG framework, policy, strategy / sustainability is fully embedded into the treasury operations without having, that parallel universe that runs next to it, which hopefully will be delivered by more robust systems, by products that are verified and labeled, and simpler reporting.
Okay, thank you very much. And again, in order to maintain the pace of this presentation, so we have no question from the floor, but feel free to ask questions to Paul, André, Lise, Guido, and the other speakers afterwards. So thanks a lot.